Hey everyone, before we dive in today's exciting trading strategy, I've got some fantastic news to share. Bybit has just rolled out a cutting-edge AI tool called Trade GPT as part of its comprehensive artificial intelligence suite known as Tools GPT. Now, what's remarkable about this is that despite the limited data available for OpenAI's ChatGPT up until September 2021, Bybit users can now tap into real market assessments and get answers to their trading questions in multiple languages using Trade GPT. It's a game changer in the world of trading. I've personally taken full advantage of this incredible new feature to bring you a really nice trading strategy. So let's not waste any more time and get into it, shall we? This one's especially great if you're into scalping trades. Once you master this strategy, you won't need to look elsewhere. I'll walk you through every step, keeping it detailed, so make sure you stick around till the end of the video. First things first, open up tradingview.com or the application. Now I'm choosing EURUSD, but you can choose any other pair, whether it's crypto, stocks, or anything else. Next, I'm setting the time frame to 5 minutes, but remember, you can apply this method to all time frames as well. These three lines you can see are your regular exponential moving averages. The trick lies in how they're configured with various settings. If you use just one moving average line, you'll encounter plenty of fake breakouts, which can be a real headache for traders, especially beginners. These moving averages act like channel zones, providing support and resistance. They help filter out false breakouts and allow you to enter trades after the price breaks through its channel. This strategy is based on price action, trends, and momentum. I'll keep it simple, with no fancy indicators or tools, so it's easy to grasp and put into action. You can spot some highly profitable trades within a few hours, especially on lower time frames like 1 minute and 5 minutes. If you're new to scalping and still learning the ropes, this simple strategy is a great starting point. You'll make quick decisions and hit those buy and sell buttons without worrying about complicated indicators. Now let's add some indicators to our chart. Go to the indicators menu and search for EMA. Apply the exponential moving average to your chart. In the indicator setting, change the length to 34 and feel free to customize the line thickness and color to your own liking. Now add another exponential moving average. In the settings for the second moving average, set the length again to 34 and change the source, this time to low. Again, tweak the line's appearance as you see fit. Lastly, let's add the last exponential moving average. Go to the settings for the third moving average, set the length to 34 again, and change the source this time to high. Adjust the line thickness and color to your own preference. Now, our first setup is good to go. Let's dive into the strategy's rules. But before we do, don't forget to hit that like button and share this video, because by liking the video, the YouTube algorithm is going to show this video to more traders like you who want to learn all about the creepy unknown world of trading, especially about technical analysis. Alright, rule number 1. The price should cross the moving average zone from above to below. This suggests a shift from a bullish to bearish trend. However, this doesn't guarantee a complete reversal. Price often retrace. Rule number 2. Prices should stay within the moving average zone. Sometimes it will hug that zone perfectly, while other times it may cross above and quickly return or close above the zone, only to return in the next candle. All of these scenarios are valid under our second rule. Now let's take some sell trades. You can enter a trade here, keeping your stop loss above the previous swing high or above the moving averages. This strategy offers a solid risk to reward ratio, with the first target at 1 to 2 and the second target at 1 to 3 or 1 to 4 or whatever it can provide you, which I'm going to talk about at how much you can push the limit of your profit factor just before the end of the video. You can also trade your stop loss or move it to break even after hitting that first target, making the trade risk-free. If you spot another pullback in the same trend, consider re-entering. But remember, it's wise to limit yourself to 3 trades in same trend while keeping your position size in check for the second and third trades. Now let's talk about buy rules. They're essentially the opposite of the sell rules. First, the price should cross above the moving averages, creating some distance between the market price and the moving averages. Second, the price should retrace within the moving average zone area. There are 3 possible scenarios at this point. Price crosses the zone from below to above, price holds within the EMA zone, or price crosses above the higher moving average. For buy trades, if the stop loss seems too far away, it's best to skip that trade. Now let's boost the accuracy of this indicator. You can actually use this indicator on its own for good results. To do this, add another new indicator, but keep in mind that in the free version of TradingView, you're limited to 3 indicators on the chart. To get around this, look for the 3 EMA indicator, which combines 3 exponential moving averages in one. The adjustments for the settings is just like before. There's no additional things that you need to do. Alright, let's move on to filtering out those fake signals. We'll need to add another indicator, the swing arm ATR. This one has some signal and zone lines, but we'll optimize it for our strategy. First, go to the Style tab and disable some parameters. Next, in the input section, change the ATR period from 28 to 200 and ATR factor to 8. That's it. Here's how we use this indicator with the EMA strategy. When the black flag indicator is green, it indicates an uptrend, and you should only consider buy trades. When it turns red, it signals a downtrend, and you should focus on only sell trades. This combination of the EMA and black flag indicator can help you avoid bad trades and improve your strategy's performance. And here's my surprise for you. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. So there you have it, folks. Thanks for tuning in, and please don't forget to like, share, and subscribe. Happy trading!